latest market update. Hi, this is Jonathan Campbell with the Don Wenner team, brokered by eXp Realty. And we're here to really give you expert advice on housing. And really, before we get started, I just really want to thank you for taking the time out, start of the new year, and really excited to just get you guys into what the real estate market is going to be doing in 2023, what is happening currently in the market, and just give you the most up-to-date local facts. We're going to spit some national facts out there, but really give the local perspective of what is happening truly in this real estate market, as there's a lot of confusing stuff going on out there. So biggest question I get right now, especially for home buyers, is what are the mortgage rates doing? So here's a couple of the mortgage rate headlines that are happening out there right now. Mortgage rates fall to a new 4-month low after downbeat data. Mortgage applications off to a promising start in the new year. This literally just came out from yesterday, both of these articles. And the rates super low. So 30-year fixed conventional on average just a little over 6%. You can get a 30-year FHA in the mid fives as we speak right now. So mortgage rates are absolutely incredible. It's a great time to go shopping for rates, what you have going on, what that looks like in today's markets. And another question I get right now is what are home builders doing in this market? What is happening with them? We're starting to see that they're bringing down prices. You see those national headlines of what's happening with home builders. So here's a breakdown of it. This report just came out actually about a week and a half ago. So home builder price reduction since March of 2022 is on average anywhere between 6 and 10% nationwide. So you can see here, no price reductions, 1 to 1.5%, all the way up to 11 to 15%. And again, this is the average of everything happening nationally. But as we know, real estate is a local business. It's a more community based, and you're not going to be averaging the national incentives about everything. So here's really what the regional home builder stuff looks like. So we are located in Pennsylvania, the beautiful Lehigh Valley. So we're in this northeast region. And you can see here is the highest, from a home builder perspective, is the highest one that has no price reductions. About 35% of home builders in the Northeast actually go through a price reduction. On average, the rest of them, for the majority, go through about a 1% to 10% price reduction, and really barely any are going 11 to 20%. So you can see here, home builders in the Northeast region, as far as pricing go, is super strong and competitive still. Florida seeing very similar numbers, but you can see here starting to some of their gains of 11 to 20%, a little bit higher, actually a pretty big jump higher. And then your Midwest, Southwest, and then national average, like we talked about a little bit earlier. And then really it's your Southwest, your Southern California, your Texas area that are getting hit pretty hard, especially the state of California, Northern California especially. And you see that in San Francisco and different areas. It's some of the hardest hit areas from a national perspective. But just focusing on our Northeast area, you can see here, new home builders, they're not lowering their prices as drastically as the news might portray because of the national take that they have on it. So in the Northeast, again, not to say that home builders aren't making reductions, because clearly they are, but to say it's not as bad as the rest of the nation goes from a regional standpoint. So that always leads us to the question, will home prices fall? Everybody wants to know that. What's happening with the market? Is it going to fall? Is it going to crash? And the short answer is, we don't see the data that shows that everything's going to be crashing like that. So home price forecast for 2023 for many of the experts that are out there range from as high as a 5.4% appreciation all the way down to a negative 5.1 appreciation year to year. And on average, they're basically staying right where the prices are at right now. So you can see here that not a lot of things are happening. You're probably like, well, Jonathan, why is everybody talking about a crash? What's happening there? So what's happening is this is what you feel right now. And I've used this analogy in a lot of my market updates that if you're going down the highway at 100 miles an hour and you see a police officer on the side of the road, yes, you are going to drop your speed limit down to probably that 55 to 65 mile an hour speed limit. And this is what's happening now again. So you can see here, pre-pandemic, home appreciation was around 12%. And then post-pandemic, when we had that crazy market, on average 38% appreciation from after that pandemic. So you can see here that 12% normal during that period of 2017 to 2020. And in that same almost 3-year period, you're talking about a 38% increase on average. So you see big booms there. So what's happening is, as things start to come down, it's more normalizing. But when you're going that fast, it feels like things are crashing. And that's what that looks like. So you can see here, home appreciation really is normalizing. And now this is really small, but this is from 1976 data all the way to 2023. And you can see here, 2022, highest of all time. As far as the market goes last year, just prices booming. You had buyers buying homes at $40,000, $50,000 over list price. And you can see here that when it drops like this, yes, from this time last year, it feels like it's dropped like a rock. But at the same time, it is still at periods of all-time highs in appreciation, and we are nowhere near what it was like in 2008, 2009, when you have a negative 15% appreciation here. Big swings there. You can see here it's actually starting to flatten out a little bit. So one of the reasons why that this is not going like crazy low right now is that the supply of houses is still historically low. You can see here that the number of inventory homes right now is still very low. In order to get up into this this market where home prices really start to decline at a maximum level, you're talking about 6 to 7 months of inventory is really where you want to see that graph at. And right now, inventory is starting to creep up, but it's nowhere, like I said, nowhere near what it was back in 08, 09, 11, when inventory was just through the roof. And what this means is that if you didn't have any listings hit the open market, that on average back in 2010, 2011, homes could sit there 12 months. That's nowhere near the case. Right now, we're under 3 on average with the inventory. And then showings in Pennsylvania. So this graph is running through the end of December. You can see here that showings in the orange have steadily been a little bit lower due to some affordability and really just the cost of goods of everything. But you can see here, it's following the same model. Home showings are starting to go back up. They're going to continue to go back up here in January. And you're going to continue to see climbs in showings going into the spring market. There will be buyers. Interest rates have been pretty steady right now, if not even going lower. And you're starting to see buyers creeping back into that market as they are starting to figure out their budgeting, as pricing is starting to come down a little bit and is making houses a little bit more affordable. So let's take a look at our Lehigh Valley numbers now. So you can see here, this is one of the things that is happening right now. So people are actually paying a little bit under list price on average. So the day and age of putting a home on the open market and always getting on average more than list price is starting to come down. So you can see that that trend is the first time in a couple of years that it's actually gone under 100%. So what that means for home sellers is that you really need to price your property correctly in this market. If you think your home is worth $250,000 and you want to list it at $270,000 because you just want to think that the home is going to appreciate and all of that, it's not that time for that. You want to remain competitive and list that home right at that market value because people aren't going to be spending $40,000, $50,000 over. The market value you want to really be aggressive of what that looks like. So again, first time in a while that it's dipped below. But at the same time, if you just look back historically, historically it's always been at 97, 98%, sometimes as low as 94% back in crashes. But on average, it used to hover right around about 98%. So we are still very, very good from a list price received from an average standpoint, again, it's just more normalizing to some of that stuff that you see here. Average sales prices here, you can see, are up from last month in November. So you can see here, it's actually up from November, December, September. And that's because a mortgage interest rate, in my mind, causes a lot of that. So you had a lot of people as interest rates start to come back down and they also start to be more consistent. What happens is more buyers then come back to the market. And what's happening here, as you can see here, sales prices are remaining pretty steady right now from an average sales price perspective in the Lehigh Valley, still at record highs right now. You can see here up 11% from this time last year. With that, year to date, 13.2% from the beginning of January. So you can see here still a big increase in sales prices. And this is why I always tell sellers in today's market that it is the best time to put your home on the market. So forget like, hey, if you need to wait for the kids to graduate from school, if there's other reasons that you need to wait for that spring or summer market, I get that. But if you're looking to truly maximize the value of your home, now is the perfect time to list your home and sell it, because not only that, prices are still very high. Interest rates are remain very steady and affordable right now, and yet you're beating that spring rush of a ton of houses coming onto the inventory market coming up in spring, where you're going to have a lot more competition with other home sellers that are out there. So again, if you're looking to really truly maximize your home sale, reach out to your local agent, reach out to the Donald Letter team, and we can help you maximize that home value right now and take advantage of the super low inventory that's happening out there right now. Homes are starting to sit on the market a little bit longer. You can see here, big increase from 2021, 2022. So you can see here that homes are starting to sit a little bit longer. Again, 25 days on average. Back then, I mean, you can see here, on average, homes used to sit like 50, 60 days on average. So again, more normalizing from that 2021 market where just things were absolutely insane. And I mean, in a good way, but you see here that things are sitting a little bit longer, but no reason to panic. I mean, days on market is still very, very aggressive. Still under 30 days to sell a home on average. Inventory of homes is starting to creep up, but still, again, at record lows right now, still at record lows. We're not in that 4,000 homes on the market. We're still under 1,000 homes on the market on average right now, 602. But again, that's why I say take advantage of this market of low inventory before that spring market comes. Again, if you're looking to maximize the value of your home, that is the perfect time to do that. Now, closed sales are down. Why? Because you have to realize closed sales usually run on a 2 to 3 month window. Well, 2 to 3 months ago, interest rates were all over the place. They were up to 7%, up to 8%, down to 6%, up to 7%. They were jumping all over the place. There was a lot of confusion in the market, a lot of things flying around. So yeah, the pending deals were not happening at a high rate. And so yes, the closed sales is very, very low for this time of year. But again, it's typical for December, but yes, this is off base of this. But if you look historically back to 2020, 2019, very, very, again, very similar numbers to what you saw in this 2013, 14, 15, 16 market. Very, 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 very similar numbers to what you see there. So again, more normalizing with that. Pending sales is down right now. What that has to do with, again, with a lot of inflation, people sitting on the thing, but then also just record lows in inventory. I mean, people are still waiting to buy the home when, I mean, there's not that many options out there to buy another home as well. So again, pending sales down 23% from this time last year, from that all-time high. But you can see here, again, going back to that 14, 15, 16 market, very similar numbers to what that looked like after that crash of like 2008, 2009, 2010. So again, home pending sales, yes, low, yet not historically low right there. So housing affordability index, you can see here starting to creep up, but still at an all-time low right now. And what that means is that just inflation is still there. So not only just your cost of groceries, your cost of home goods, cost of everything in life that you're dealing with. But then you're also dealing again with just the prices are still very high from home seller perspective, and also the fact that the interest rates have doubled and they're really at the low sixes, really combat that. So when you have interest rates that are in the sixes, you have home prices that are still very, very high. And what I mean by very high, I mean they're going to hold steady there for that. But and then the inflation, the housing affordability is starting to creep back up. You can see here, but again, still pretty low, meaning that people's so instead of maybe looking at a $300,000 house, you might be looking at a $250,000 home based on your budget of everything that you have going out there. So a lot of people just ask, hey, should I buy a home right now? And my answer to that is, well, why are you asking that question? What is your actual alternative that you might have out there? Well, I mean, it might be, hey, you can just stay in your current home that you have. But hey, if you want to maximize your value of your home, get it on the market now. Get that home price going, or get that home sale going, because you will maximize your price. Or you can continue to rent. But again, rents are continuing to climb. They will continue to climb. They're starting to flatten out a little bit, but they are still at all-time highs with rental prices. So if your alternative is to get into a mortgage at 6%, you can talk to your agent about adjustable rate mortgages. Adjustable rate mortgages are not like what they were back in 08, 09 when the market had crashed. They are very, very good right now. And as those interest rates start to fluctuate, maybe they go back into the fives, who knows? But at the same time, you do have the ability to do that. But again, I mean, what's your alternative that is out there? Is it to rent? Is it to pay another person's mortgage at that point? So in short, if you can find that house that meets your financial expectations for a monthly payment, it is a good time for you to buy. Do that. Don't wait. Don't wait, because hey, you don't know how house price is going to go. Is it going to go up? Is interest rates going to go up? Who knows? But at the same time, if everything meets your needs and it gets you in a better situation, pull the trigger, make it happen. I mean, you saw that if you need to sell a home, you can still get incredible prices that are out there. If you need to buy a home, interest rates are pretty steady right now. Also all-time lows, not all-time lows, but lows over the last 4 months in the sixes, low sixes, FHA in the mid fives, if not low fives, and you can get into a really, really, really good home. So in short, strategy matters in this market more than ever. So talk to your local expert. Come to the Don Winter team in the Lehigh Valley. We'll help you out with all your home selling and home buying needs. We can help you just navigate every question that you have on that market and make sure that you get into the home of your dreams, or at least have the ammunition to make an informed decision, because there's nothing worse than making an uninformed decision in this market without any confidence. We have the confidence, we know the market, and we can give you the right data to make it happen. So hey, make it a great January. Enjoy the rest of this winter. February, I'll see you guys, and we'll make it happen and give you more stats of what is happening in 2023. See you guys.